I think we've actually already seen some increase in stress in the market. If you look in the bank debt market, for example, the amount of debt trading below 80 cents has tripled this year. The amount below 90 cents has also increased very substantially. After years and years of low interest rates, I think that lenders have been willing to do without a lot of the protections they normally get, and we're starting to see the consequences of that already. This could be the nudge that maybe drives a lot of those bonds down even further.
To a worrying conclusion in terms of creating a major recession, or just individual stock-specific issues?
I don't know that this would be the cause of a recession. I more see a recession as a cause of price decreases. I think price decreases are what happen as a natural consequence of overreaching and poor credit underwriting, which is what we've been seeing for the last couple of years.
You just closed a joint venture in real estate. It looks at all sorts of different kinds of real estate. Is everything a good opportunity in that area, or do you have to be very specific when you're making these choices?
I think our assumption on that particular fund is that we're pretty late cycle, that cap rates might well increase, and we have to be really selective. That happens to be a joint venture with a company that literally sees thousands and thousands of projects every year as a contractor or as an owner's rep. And from that vast network of deals that they see, there are certain ones that stand out as being outstanding investments. And we're in a market where bank debt is hard to come by for construction-related projects, so investment capital is needed on the equity side, and that's where we fit in with that. But I think we have to be extremely selective at this point in the cycle.
Looking at the equity markets, record all-time closes expected for the three major averages today. The VIX, though, is under 13, 12.75. Is there some complacency, do you think, in broad equity markets as well?
I think there's been a complacency in general, whether it's in the private markets or in the public markets or in the equity markets or in the debt markets. Unfortunately, that's what happens when yields get so low. People are forced to take risk, and sometimes they take foolish risks. The other big transformation that we're seeing is that more and more business is being done in the private markets, really without some of the public market protections. It took a public filing to sort of unmask some of the issues surrounding WeWork, for example. And we're in a market now where the number of publicly traded equity companies is about half what it used to be. And over half of the high-yield bonds this year were placed in the private market, not in registered offerings. So I think we're only starting to see the implications of this transformation from public markets to private markets.
What is your take on the consumer, especially if interest rates back up and continue to back up?
Look, consumer sentiment is really fickle from time to time, but the consumer's been strong and has continued to stay strong, even when we've seen some fluctuation in corporate CEO confidence. And unemployment remains low. The U.S. economy is pretty strong, but we're not an island. And it doesn't take much to change that sentiment.
It sounds like there's a lot of concerns, and your key message being has to be super selective. So what are the top selections in your mind of the 25 billion AUM we mentioned? Where is the bulk of it at work at the moment?
Well, we're involved in some of the bankruptcy and distress situations that are the largest ones that you've seen in the marketplace.
You're reportedly in PG&E at times.
Yes, we're involved in the debt of PG&E, not in the equity, and for specific reasons, including the way that post-petition claims, such as the recent fires, get treated in a bankruptcy. We're involved in Puerto Rico. We're very involved in Caesars, which is out of bankruptcy, but is only beginning to work through some of the operational issues where we think there's a lot of opportunity. And we're taking a good look at a lot of the debt that started to drop in the current environment, because that universe is a lot larger than it was earlier in the year. As I said, it's 3 times as large. So we're looking. But we're being patient. I still think have to be patient.
General Electric was a position also you were linked to. Do you think it's past the worst threats to its future?
General Electric is pretty opaque. We never really had a particularly large position, although it certainly brought about a lot of questions. But we haven't really been involved in it, so I'm not up to date on it. And it's pretty opaque.
Leon Kuberman was on CNBC recently and floated the number of a 25% pullback in the market if Elizabeth Warren became president. Do you have a view on that?
I certainly think that if Elizabeth Warren becomes president, I would say that a lot of market participants will definitely get scared. It's just the nature of the way market participants are. And it was a point a few weeks ago as she was climbing in the polls that the market was going down, and when she would drop in the polls, the market would go up. So I think this can affect the debt markets as well as the equity markets, and it'll affect confidence.
Are you one of those participants that would get scared?
I think I'd get scared, sure. I think that's just being realistic. That's not a political statement. That's an observation about what I think will happen to the markets if her probability of election increases dramatically.
We've heard a lot of wealthy individuals speak out about the wealth tax and their opinions on it, as she put forth in this 60-plus page paper. What do you make of her policy?
I don't really have a lot of judgments on it. I know how difficult it is as a practical matter to administer even an estate tax in this country. So it's a little hard to see how that gets implemented, and there are constitutional implications as well. So I haven't really focused on it a lot. Most of my friends say it's unlikely to actually become policy, but I don't really have an opinion on that one way or the other.